Today we are looking at View, or View stock, which is going to be coming public through a SPAC. The SPAC is CF Finance Acquisition Corp. 2, as if it couldn't get exciting. You got the sequel, CF Finance Acquisition Corp. 2, because finance folks can't come up with better names. Oh my gosh, you gotta love these creative finance names. The ticker is CFII, so it's CFII SPAC or CFII Stock that is bringing View stock public. This deal is valued at $2 billion plus. It's a fairly large deal, $500 million in cash from the SPAC, another $300 million from a private placement. What is View? View is a dynamic glass product where management thinks they can grow over 100% CAGR over the next few years, which would make it one of the fastest growing companies in the world. The question is, can they deliver? This video goes out to Ajith, Prashant, and Sikandar, who are all Unrivaled Investing Journey subscribers. So thank you very much for bringing this to my attention. And this video goes out to all Unrivaled Investing Journey subscribers. And about that, a quick 10-second plug about this channel. So my name is Daniel. You're watching Unrivaled Investing. This is a no-hype financial channel, mission focused on finding you exceptional companies and unrivaled investments. So if you're interested in finding potential multi-baggers, the types of companies that can go up hundreds or thousands % over time, make sure you subscribe. If you're already a subscriber, I appreciate that thumbs up. And if you want to follow my personal journey to try to find potential multi-baggers each month, calling out a potential new multi-bagger, go to unrivaledinvesting.com, click on Journey. Let's dig into the View. And I'm not talking about that TV show. So what is CFII? What is View? It's actually a relatively simple deal. This is just going through the sort of the framework of the deal, where you could see $500 million cash from the SPAC, another $300 million from the PIPE or the private placement going into this company. A lot of it is going to pay down debt that View has acquired over the last few years, or debt that's incurred in their balance sheet. You got $50 million in deal expenses, so that's about 6% of the capital raised. That sounds about right for banker fees. That's how this machine keeps running. Then another $473 million to sort of shore up their balance sheet. This will make more sense as we dig into the company. Like, why do you need to shore up their balance sheet? And you can see, who gets the stock post deal, and you can see that the founders of the SPAC will be getting about 4% of the deal, and that's what makes these deals just keep on going, is because the founders of the SPACs are highly incentivized to get a deal done because they get a few percentage of a multi-billion-dollar company effectively just for getting a deal done. So let's keep going in terms of understanding this. So, if it will have pro forma 214 million shares outstanding, so ignore whatever you're looking at with Yahoo Finance. That's the multiple you should be thinking about, like 214 times whatever the share price would be the implied pro forma market cap if the deal goes through with View. So right now, over $2 billion. So what is View? It's a dynamic glass company. It's regular, this is straight from one of their press releases, regular glass with a series of thin nano coatings that react to a small electrical charge, creating different levels of tint. And you can see these different levels of tint. It is clear and lets in the most sunlight and warmth. It is a default level. Tint 2 manages some solar heat while still remaining clear. Then Tint 3 and Tint 4. Tint 4 controls glare and keeps you cool. So how does this work? And you can see it's the multiple, this is how the smart glass works. You get multiple layers of metal oxide, form electrochromic coating on the inside of the glass. So multiple layers of this coating, you get these smart layers, multiple thin layers of metal oxide form the electrochromic coating on the inside of the glass. When a tiny electrical voltage is applied to the glass, ions move between metal oxide layers, causing the glass to tint. The darker the tint, the more solar radiation and glare are rejected, resulting in optimized light levels and temperature for occupants, i.e. it's smart glass that gets darker the brighter it is and keeps the room a little cooler. Because I think many of us have experienced being in that conference room where the lights are on the lights from outside are full blast and you're like, oh my gosh, it feels like it's 100 degrees in here. So what's the value proposition for dynamic glass? Like, what is their value proposition? And it's about improving the user experience. So if you're inside a building or a home or what have you that has this glass, you're talking about reduced eye strain, reduced headaches, drowsiness. It's a better, more productive. You don't have that bright shiny glass. Oh, you gotta fix the blinds. Oh, the light's still going through the blinds. Increases the value of the building, and we'll get to that in a second in terms of how management's penciling that out, and also saving energy, because if you're able to better regulate the amount of energy and heat that's coming in by effectively reflecting it with a tint, you don't have to run your HVAC or your AC unit at such a level, so then you can lower your operating expenses long term. So higher capex to build this out, lower OPEX over time for the building owners, landlords, because people are going to be using less electricity to keep the rooms cool. But that's just where they've been. We need to talk about where they're going. And now they're on their fourth gen product, ready for mainstream. This is a company that's been around for several years. They had Gen 1 in 2012, so that I think the CEO talks about how this company's been around for like 12 years. You can see like they've been building this out for many years. In 2020, they're just launching their fourth gen product. It's accumulation of 1,000 patents. They're talking about how they're breaking in AI and machine learning algorithms, glass break sensors, so if something chips, you have a sensor that'll let you know. And they're saying this is ready for the mainstream, and it's not just tinting. This is the part that starts getting exciting, is that you have one thing, which is it's customized beyond intelligence. That's what the way they explain it, which is kind of funny. Customized. What's beyond? Is this like super genius glass? It's beyond intelligence. Or it's the custom light per room. So now, like on your phone with an app, because you're effectively talking about this smart glass, like maybe you could change like, oh, let's actually make the tint in this room a lot darker. And the main hallway, I want it super bright when people walk in, but maybe these conference rooms, I want it much darker. And, you could change the settings that you want, set schedules for individual zones or entire facades, customize your experience using scenes. So it's actually interesting. Like, what if you could actively change the tint versus just having the tint happen for you? Another aspect, so that's just one level. What's the next level? This is the customizing way beyond intelligence. This is where you're talking about the Mensa glass, where it could be the equivalent to having a computer monitor baked right into the wall. It's not clear to me, how much this is going to roll out. In their presentation videos, they do show this, which is like, hey, here's a woman standing next to a wall of glass, and here's this Zoom call going on, and she's pointing at some table and showing like, hey, here's the chart, and then another screen shows someone like writing on the glass. So like they're saying we're pretty much there at having smart glass, which would be the equivalent of having a smart whiteboard wherever you want. Now you do have to pay a premium for installing this glass, but this like seeing this future does strike me as pretty cool. This sort of Minority Report-esque of like, hey, you just walk up to some glass and you start like effectively tapping into the internet as you're playing around with the glass. So I like it. It strikes me as cool. Strikes me as having a lot of potential. I could definitely see why this could be unrivaled in the future, if they're able to roll this out, and how many other competitors could do that. But let's keep going into this. And they're getting real customers based on this list of customers. FedEx and Google. I mean, these are major players. Netflix, Uber, Stanford Healthcare, a bunch of property owners. So you can see like airports are a big part of their business, because as you imagine, going to an airport, you see a lot of glass, walking through the terminals, and it's always like, oh, super bright in those terminals. So like, hey, let's have it intelligent tinting. You can see Boston Logan and several other airports, LaGuardia. So and why are customers like paying up for View or the smart glass? So here's one take on it, and this is sort of like through the lens of why a developer would be willing to pay for this, which is that, the View Premium is about $5 million, let's say, for rolling this out. But you don't need to have blinds because you're going to have smart tinting. You don't need to have as much HVAC power. So let's say you're actually saving $2 million on that versus the $5 million premium that you're paying above what you're paying for regular glass. So a net investment with View of $3 million. But they're saying because this is like you're upping the value of your property, now you're going to be able to increase your rent by $3 per square foot. It's not clear to me how realistic that is. If you're talking about a building area of 500,000 square feet, they're saying that's a net increase of their net operating income for this property of 1.5 million, because 3 times 500,000, and saying, look, take a cap rate of 5%. This is how real estate's valued. Cap rate's effectively like the inverse of a PE ratio. So instead, 5% would be the equivalent of 20 times 1.5 million, and that gets you to 30 million in value creation because you made that investment in View Smart Glass, this $3 million net investment in Smart Glass. And they're saying it's actually like even better than that because like you have better space utilization. You're not using all these blinds. You have better energy management, and like productivity is worth tens of millions of dollars, right? Because people are happier. And like that's, I think, the case that they're trying to make with some of these companies like Google and Netflix. They're really making the case like these are some of the best companies in the world that really do care about their employees. They want to make sure that when you're coming into the office or coming back to the office, this would obviously be a post-COVID play, that you don't have light in your eyes in an unfavorable way. It's a very pleasant work environment. And they come across as the leader. They say this as the leader in smart glass, where they say they have over 80% market share. I'd love to see what their competitors are doing. I don't like this chart. It looks pretty on first glance, but this is classic banking, lipstick on a pig, because the cumulative smart glass design wins, I would much rather see design wins by year to see whether or not you're getting traction. This is cumulative amount, because cumulative actually doesn't look that impressive when you're looking at 2020 versus 2019. It makes it look like your net wins were actually fairly small if you're actually thinking about it intelligently, versus this, which is sort of masquerading of like, look how great we are. We'll get into that sort of tricky business in a second. And look, at the end of the day, they're tapping into a huge, enormous opportunity. That's a lens I like to look at all investments, is does it have 10x potential? And they're saying, look, the market size for North America building window glass consumption is 120 billion total addressable market. And so, if they could, and they historically products reach 5% adoption in 3 to 10 years. So not even looking at global, glass, building window glass consumption, which is, they're saying, is $1 trillion a year, just completely bananas. If you're just looking at North America at a 5% adoption within 3 to 10 years, that would imply that they're at like 6 billion in revenue. So that would just be phenomenal growth. But that's sort of what's being implied here. So there's a little bit of like hyperbole or getting excited about what their potential is when you're seeing this. Let's keep going. So what is management forecasting if you are talking about just like bananas type of growth potential in the years ahead? And so here you can see what they're forecasting, where they're looking at 31 million in revenue in 2020. Notice they didn't put their growth rate, so we'll definitely need to get back to that. But then they're saying, look how hot we are in 21, 138% growth, then 22, 189% growth, so nearly 200% growth in 2022. Then it decelerates very modestly to 120%, 100%, 100%. Just, man, why didn't you just say 100%, every year going into the future? And then they think their gross profit in the years ahead could be 60% gross margin, making $1 billion in gross profit in 2025. EBITDA, or a proxy for free cash flow, of $700 million within just a few years. I mean, that would be truly incredible. This is what management is forecasting. So usually management takes a pretty optimistic case. I would say this is very aggressive looking at this. And if management delivers on it, it would be an exceptional return. And what gives them confidence to sort of pencil this out? Because this is a very aggressive. So you're either a complete nut job, a sociopath, or you actually have something to back it up. And here's the part where maybe management gives them confidence, is they're like, look, we have 560 million in design wins. We have this $1.7 billion sales pipeline. And another chart that I didn't put here is how they do have relationships with effectively like the top builders, the top architect firms that are becoming key clients, that are like, hey, we love your product, let's recommend it. And you can see this is what actually drives this dramatic growth in revenue from 75 million to 216 million. And this is the part where it starts getting a little concerning, and we'll get into this in a second, but there's a video, and you can check it out yourself. Here's the link. It's cheddar.com and the full deal. Back in July 2019, we're in an interview with the CEO, and he goes, look, we're doubling our business every year, so we're growing very rapidly. That was just one snippet around the 2 minute 18 mark. This was once again from July 2019. But when you look at their actual historical results, which is the very back of the presentation, like this is the liar, liar, pants on fire, where look, you're actually only growing 20% from 2018 to 2019. This is when you were saying you were doubling every year in the middle of 2019. So yeah, maybe you're just getting caught up in your own projections, thinking that in the future you're going to be doubling each year. But the reality is, from 2018 to 2019, it's 20%, and 2020, which admittedly is a projection, they're saying is actually only 30% growth, growing from 24 million to 30 million. And then just looking one line lower, which is cost of sales, their cost of sales is what? Their cost of sales in 2019 is 180 million versus 24 million in revenue. Like, what? Your cost of sales is like 4x your revenue in these cases. Like, that's crazy town. Like, why are your losses so huge? Like, you're selling your glass at a huge discount to your costs. Like, yes, you could definitely grow if you're selling it it costs you $1 and you're selling it for 24 cents or 25 cents. Yeah, you're going to be able to grow, but holy cow. So they're saying, look, you have diseconomies of scale, or the economies of scale, however you want to phrase it, where like, look, there's just huge costs. You get this factory up and running to make this type of glass, and that's why our margins are so negative right now. Crazy. 150 million negative cost, negative margin, gross margin. That's before any R&D or SG&A, which were each 70 million in their own right in 2019. And so they're saying, look, yeah, it's going to take a few years for us to sort of get the scale we need on our factory, on the fixed cost, on the variable costs, and then by 2022, you're actually going to start having positive gross margin, which is like, holy cow, that's a few years before you even start having positive gross margin. Yeah, this is just tough, and they're saying it's the point of just leveraging the scale of sort of their fixed costs, getting based on their capacity. I don't know. Like I would think that there's just, looking at this, it just surprises me that you can't get to scale faster and that they're that unprofitable. Maybe it is that much of a revolutionary product and you can't get it made elsewhere at another glass factory, or fix up another glass factory to make some samples. But just like seeing this, oof, that is brutal. Or maybe I'm just getting too biased looking at software companies with 70, 80, 90% gross margins. Okay, so what are my thoughts as I'm like looking at this? And my quick take so far, because I've covered a couple of different things, is one is they're tapping into a potentially huge opportunity. Like that, management makes that fairly clear. And they potentially have an unrivaled product. So huge, enormous opportunity, potentially unrivaled product, but the financials are awful right now. And they have a CEO that's potentially overly promotional. And for me, like for my personal investment journey, I don't want to align myself with overly promotional types. That just really, it rubs me the wrong way. So are there any other potential, let's say, warning signs? And this is potentially where things start to completely go off the rails. Let me share a few examples. So one is like in their presentation, they start comparing themselves like they're the first complete product that defines an industry, just like Apple defined the industry with their iPhone, or Tesla with maybe their Model S or Model 3. And I'm like, dude, you're comparing yourself against Apple and Tesla. Really? Like there are some minor differences here that you might want to consider, like how Apple, they launched in 2007 their iPhone, and like 2008, if most people don't remember, like 2008 was a great financial crisis. They were posting like 30% growth, and they still had 30% plus gross margins, tens of billions of gross profit, and many billions of profit. So like, yes, don't compare yourself to Apple and Tesla. That just sort of soils yourself when you do that. And then they compare themselves to these other comps. Like, let's look at these other market leaders. Like Amazon has 14% market share and 1.5 trillion market cap. Like Uber 4% market share, 65 billion. Tesla 1%. Like View has less than 1%. What's the market cap here? Like, doesn't this get your fear of missing out juices flowing? Or does this just completely soil management's credibility? I don't know. It depends on the person. I look at this and I just think GTFO, man. GTFO. Seriously. Tesla, Amazon, really? You're comparing yourself to Amazon? You're a glass company. Yes, you might be a smart glass company, but other competitors will probably come in the future if you have an amazing product and they will disrupt you. That's like my take. Like, yeah, maybe 5 to 10 years from now, if you have a successful product, you potentially have real competitors come in. Anywho, like, seeing this, like, further went off the crazy train, went off the rails seeing this. And this one's pretty funny as well, where they're talking about improving human health and productivity, where you get 37 minutes more sleep based on some studies. So is that sleep in the office? Like with the tinting, like you can like sleep behind your computer a little bit more effectively, or the 42% higher cognitive ability. So this is like truly Mensa glass. Like, I'm gonna like transcend to the next level if I'm in a building with this glass. And you're 77% less likely to report depression. So, yeah, that View is not only making you smarter and sleeping better, but they're going to disrupt the depression drug trade, because you don't need to go get those happy pills anymore, because you are less likely to be depressed with that natural tinting brought to you by View Smart Glass. I mean, this is just ridiculous. I mean, this is the peak of like overselling yourself, in my opinion. So what are my thoughts at this point? As you can tell, like, I liked the setup at first, but then you went on the overly promotional, and now I don't trust you. You know, you crossed the line. So I need to see management execute before considering, you know, letting View become part of my journey, or CFII stock, and including this in part of my portfolio or my journey. Like, do they really have product market fit? Or are they really just selling expensive glass for well below their cost? You know, that's a core question, given that, like, in 2019 it was 24 million in sales versus 180 million in cost of sales. That's crazy town. If management is right and not overly promotional, like if they're right and they start executing on this and truly do deliver 100-200% growth in the years ahead, like, then they are tapping into a huge, enormous opportunity, and you're looking at potentially decades of growth. So, like, yeah, if their patents, you know, truly make them special, competitors can't enter, you're going to have a long runway, multi-year, multi-decade runway of growth. And so from my perspective, I can wait for them to prove themselves. I don't need to, you know, get in at this stage. You know, I look, other venture investors that want to, you know, take that high risk, high reward potential and want to do that, God bless, and I hope that works for you or for them. But for me, I'd rather see, like, oh yeah, you actually do have product market fit where your gross margins are now profitable, and maybe you start even working on that operating leverage. So if that means, you know, waiting a few years to see it deliver, fine. There's thousands of companies out there that are proving themselves. You know, the trick is, you know, just finding the ones that are right for your own personal journey, and that's my take, is I want to find things that are right for my personal journey. And you don't have to get with every promotional stock, with every, you know, with crazy potential to get satisfactory returns. One could argue you actually don't need to find any promotional stocks to get a satisfactory return over time. You can find stocks where the CEO is not overly promotional, not saying we're doubling every year when they in fact are only growing 20% in 2019 when he said they were doubling year over year. So, you know, I would say, you know, you're getting the vibe here. There's a lot of aspects to this that rub me the wrong way. That said, if you want to see, you know, what are the potential multi-baggers that I am including in my personal journey, what I'm buying, what I'm selling, what I'm holding, go to unrivaledinvesting.com, click on Journey, and each month I post one new potential multi-baggers for Journey subscribers. I also am creating an educational series. You know, one of my most recent videos on the educational series was about something that I think actually most portfolio allocators or professional investors don't, or really most investors, period, really think about, which is portfolio allocation. And there actually is an optimal betting strategy for how much you're supposed to put in or potentially put in to allocate. The full table of contents of the exclusive videos that I've created, you can see below in the description of this video. You can click on it and see all that content. And I recently just posted my December potential multi-bagger, where it's an example where it's a CEO that, in my opinion, is very down to earth, has huge skin in the game, and it's about what he talks about. He's saying, look, I see potential teens type growth for years into the future, and it's a very sort of clear reason why. It's not hyperbole, and there's execution to back it up where they've already significantly increased their revenue over years. So that's sort of what I'm looking for. I like to find something that's already proven themselves with the potential to become a multi-bagger. And the reality is, finding just one potential multi-bagger can change your journey. So if you're interested in following my journey, what are the investments I'm considering? What are the investments I'm looking at, buying and selling? Go to unrivaledinvesting.com, click on journey. And if you enjoyed this video, learning about View Stock, which I hope you have, please subscribe. If you're already a subscriber, I appreciate that thumbs up, and thank you so much for watching.